Welcome to the Asia Trade. I'm Shery in Tokyo. The top stories this hour. Asian stocks set for declines as Brent oil soars above $100, with President Trump threatening a further escalation of the war in Iran. Treasury yields hitting their highest levels of the year. Intel higher in late trade as well as its revenue forecast shatters estimates, with AI data center customers clamoring for its chips. Cambodia's prime minister tells Bloomberg exclusively that he's ready to do more to crack down on international scam networks. We're live in Phnom Penh.
And I'm Haidi Stroud-Watts in Sydney. Take a look at the setup for trading across Asia. And as Shery mentioned, is really that confluence of geopolitics, a threatening escalation when it comes to the US-Iran war, as well as keeping an eye on what's going on with chip makers. Intel, that doubling of profit estimates, certainly suggesting that that spending boom for AI is alive and well. That bodes well for chip makers going into this session in Asia. But elsewhere, we are seeing broadly that malaise looking to set in a bit for Asian stocks. Oil surging past $100 certainly doesn't help that at all, but we have seen quite a lot of price action as over the past few days with all of these earnings, so potentially a little bit of time for rotation in this session. Chicago Nikkei futures looking pretty muted. US futures just sticking to the upside there, but we are seeing a bit of a fall as we get into the start of trading in Korea. Quite muted for the yen at the moment, but really not budging from that pretty high 163 level there. A lot of risk now potentially being posed against Japanese equities if it potentially curbs foreign inflows that have really helped propel that market to record highs. But take a look at what we're watching when it comes to these chip makers, right? As I mentioned, Intel doubling that profit estimate in the second quarter on the back of the AI data center order surge. That comeback story is really gaining steam, and it does raise the outlook for both revenue and spending there. So all of this telling us for broader markets, so for these Asian chip makers and AI adjacent names, that support could continue when it comes to just these continuously impressive results that we've been getting. Chip makers, memory suppliers, despite some of the volatility for stock prices, the outlook for that underlying business continues to improve at places like Intel. The big question, of course, has been how long these hyperscalers can keep ramping up, whether demand will start to become muted. Is that going to be enough to justify all of this spending once the costs start getting passed on by some of these companies as well? But we are looking like a very bright after hours picture for this space. But let's get more. Our Bloomberg Intelligence senior semiconductor analyst Kunjan Subani joins us now. So take us through these numbers. What really jumped out to you in terms of what has just provided, I guess, more of a catalyst for reassurance for investors?
Yeah, I mean, finally, after a long time, things are really turning around for Intel, especially on the execution terms. On the demand side, like you mentioned, the AI boom is really driving the server CPU demand, which is helping everyone in this space, including Intel. And this was somewhat expected, this goodness in the server CPUs. What really surprised us was the beat in the client, which is the PC side. I mean, look, there's supply constraint across wafers and memory, which is really impacting the end market PC unit. And PC units are not doing as good. But what's really helping Intel here to have its own supply, which they have been steadily bringing up. So more volumes coming out of their factories, better yields, lower cost, which is helping them to get more revenue on the client side, despite the units not selling as much. They're being able to sell a lot more AI PCs, which is really helping with the high ASP. And the margin in that segment has also been improving steadily because of all this operational discipline work that Lip Bhutan has been laying out for the last year. So both those areas combined, the tailwinds from the AI boom in the servers and the Intel specific work done on the side of client PCs really helping them.
How are they doing on their longer term turnaround then?
Yeah, on the the turnaround is reflected in the foundry efforts that I just mentioned. The 18A yields continue to improve every single month, which was also what drove the more volume to drive higher revenue. Their advanced packaging seems to be going on a really great momentum, which again remains on the supply constraint side for the rest of the industry. They didn't announce a new customer, but we believe the progress in the 18A will bode well for the external foundry customers.
Our Bloomberg Intelligence senior semiconductor analyst Kunjan Sabani there. Let's get more on tech and bring in Dan Ives, who's a partner as senior managing director, I should say, at Yorkville Ives. Dan, really great to have you with us. So does this give enough of that catalyst that will continue to see the justification for how much spending is being poured into the space?
Yeah, I mean, look, it's validation. I mean, if you look at what we saw with Alphabet in terms of the CapEx, and now you look at Intel, you piece it together, this is showing this AI revolution. And we're just starting in terms of this next growth frontier. And I think that's what investors want to see across the board. And you're starting to see it now from Intel.
This is a market that, given the amount of volatility that we've seen, clearly investors are chasing for that next catalyst, the next justification, the next support level, right? Do we continue to see the volatility play out?
You're going to continue to see the volatility play out, but when you think about where the data center build is, and in terms of what's ultimately going to be physical AI and just more and more of a data center spending, I mean, you're going to have what called $3 to $4 trillion being spent. You're only about 15% through, and that's how you have names like Intel doing what they're doing. But you piece it together with what we see from Alphabet, with what we see across tech, and I think it sets the tone for what we're going to see in earnings season over the next few weeks.
Which ones are you watching closely right now?
I think, look, it's the rest of the hyperscalers, because you got to see how Microsoft and Amazon ultimately, in terms of that cloud growth. I think that's one of the best barometers relative to that. What we see, look, we saw it in Alphabet, but now you got to see it in Microsoft as well as Amazon, because that pieces together what we're ultimately going to see across tech. Look, it speaks to our view. This is a true fourth industrial revolution playing out. And we're just in the early stages of it. And the earnings season just further validates what we're seeing across the board where the enterprise spend is.
Expectations are so high, though. I mean, the way that Alphabet is trading despite the results. What sort of metrics will you be watching to see how stocks also move? And is that a clear reflection or the appropriate reflection of their strength?
You know, it's a great question. I think right now the issue is you're in between CapEx and monetization stage. But if you saw Alphabet, I mean, the cloud growth was phenomenal. And now it all comes down to investors. Where's the patience? You see that with a name like Tesla versus do you start to see the monetization in Meta, in Microsoft, in the rest of software earnings, in infrastructure? I think that's what investors are focused on, because what Intel is showing you, the spending's there. And that's ultimately, I think, when you look at names like NVIDIA or you go down the semi-food chain, it's a positive for broader tech. Now it comes down to you're between the CapEx and the monetization. Patience is obviously an issue for investors, but when you put up the numbers, investors are going to reward it.
We're going to see more reward when it comes to the AI names outside of these top markets. Are you perhaps more compelled by the opportunities in China, given the developments in Moonshot and what looks like a pretty rapid closing of that AI gap?
Yeah, look, this is a two-horse race between the U.S. and China. And the reality is when it comes to robotics, China's leading. When it comes to power, they're leading. When you see when it comes to open source, what we see on the models, that gap's going to continue to narrow. I think for China now, it's really what you want to see in terms of the use cases relative to big tech playing out within China. But it's our view, you can't just play the U.S.-China market. You have to also think about where this is, what's the ripple effect? It's going to be Middle East. It's going to be India. But right now, it's U.S. and China that are at the top of the mountain, and you're seeing continued competition, which is good for ultimately for investors.
How difficult might the regulatory environment become? We've had another case this week of potentially AI going awry, right, when it comes to OpenAI. Is this going to become more of an issue for politicians worldwide? And will we see these sort of regulatory curbs when it comes to the technology and the scale?
I think that's going to be front and center. It's going to be a clear political issue when it comes to the midterms, data center build out. You see the moratorium in New York, from Hochul. Some of the stuff that we're seeing across the United States, you'll see it in China as well in terms on the models. This is going to be a tug of war. But again, the problem is when politicians get involved in technology, that's not a good formula because you stop innovation. And I think this is going to be the balance that will continue to play out across tech, whether it's in the US or in China.
When it comes to politicians getting involved, we've seen sort of a different picture across Asia where governments are really putting very heavy investments, sort of an industrial policy towards artificial intelligence, towards semiconductors as well, especially across South Korea, for example. What does this mean in terms of competition among economies and some of these players as well? A lot of these government related projects are to do with Samsung, SK Hynix, for example.
Look, I mean, Korea, I think, is almost the poster child. What you see there, you see it from the government down to obviously the memory boom. Go back a few years ago. I mean, the Korean market was not going to be front and center relative to where it is today. You're going to see other countries, I think, take that lead. The private-public partnerships are going to be extremely important because this is an arms race that's happening globally. It's U.S., China. But when it comes to memory, you look at what Korea's done, and I think many other countries are looking to say, okay, how did they play? No country wants to watch the AI revolution from the stands. They don't want to watch it from the outside in. And I think that right now is sort of the balance that we're seeing play out across tech.
Dan Ives, good to have you with us, partner and senior managing director at Yorkville Ives. We continue to watch the latest AI trade, and also we're watching the latest on breaking news. HSBC will be selling their insurance business to Allianz for $2.1 billion US. We're talking about its life and health insurance and health business in Singapore. After the completion of the deal, HSBC and Allianz will enter an exclusive 15-year bancassured distribution agreement for Singapore. HSBC says that the disposal of this asset is expected to generate a pre-tax gain of $1.8 billion. Now, the deal is expected to be completed in the first half of next year. Still ahead, energy markets on edge after President Trump threatens to intensify strikes on Iran. We'll get the outlook for global supplies. Plus, the administration of President Trump rebuilds its tariff wall, slapping new levies on some 60 economies after an investigation into forced labor. Details coming up. This is Bloomberg.
Take a look at what we're watching when it comes to oil markets. Crude set for that weekly gain to be held as this ongoing Middle East crisis continuing to fuel supply fears, inflation fears globally. That weekly surge that we're seeing after Houthi attacks on tankers in the Red Sea, opening up another front in the Middle East conflict, where President Trump threatening to extend US strikes on Iran and inflict, quote, major military punishment on both Iran and the Houthis. And of course, this extra complicated element of having these regional proxies come into play now as well to be considered. Brent crude last traded higher by 7%. We are seeing New York crude pretty flat at the moment. Not a lot of moves when it comes to gold as well, taking in mind what we've seen with the strength in the US dollar and the inflation picture. We are now hearing US forces starting another night of strikes against military targets in Iran at 6:45 p.m. Eastern, marking a 13th consecutive night of US strikes against Iran. Let's bring up Bloomberg News editor Brian Peach. So there's no let-up, it seems. There doesn't seem to be any urgency when it comes to either Iran or the US when it comes to recommencing or, having these peace talks take place. What are we hearing from President Trump in terms of what's at his disposal next?
Yeah, as you mentioned, the U.S. strikes against Iran have become pretty routine for the last few nights. And from Trump, it's been a lot of escalatory language, but not necessarily a lot of escalatory action as of late. He told Axios today that he was very close to a decision on what he called a massive attack on Iran. But U.S. officials told Axios that Trump has not made a decision on that. So it remains to be seen just exactly what will happen, but it definitely doesn't feel like things are calming down anytime soon.
And at the same time, we're seeing broader oil market inflation picture changing. And this is not popular within either Trump's own party or with the broader domestic audience, right? We're just over 100 days out from the midterms. Does the president seem to be feeling any of this pressure?
Definitely. There are a lot of Republicans that are in kind of tight spots. And, the inflation is kind of the topic of the moment for both parties to be talking about. And for the Republicans, they're on their back foot trying to defend against this. And as you mentioned, Brent crude popped above $100 a barrel today following those Houthi attacks on the Saudi tankers. And so it doesn't seem like, again, that, things are cooling off anytime soon, which is bad news for the Republicans in the midterms.
Bloomberg News editor, and he talked about bad news when it comes to the GOP. Well, perhaps it's also bad news for oil bulls or oil bears, because we're actually seeing that President Trump's latest threats of escalation in the Middle East have sent Brent crude back above $100 for the first time since May. Let's get more with oil reporter Nicholas Watt. Nick, so what are we seeing in terms of the physical market as well and supplies?
I think it's very clear that we're in the middle of a crisis, that sense has escalated only, and as in terms of physical supply, now coming out of the Strait of Hormuz, there's really little. It looks like Red Sea flows have also been cut. And also one more thing to watch out is how Kazakhstan has actually cut its oil output, because all the attacks that Ukraine is doing on Russian shipping in the Black Sea have forced the pipeline by which those cargoes go to water, the Kazakhstani cargoes, to be cut. And so as a result, I think oil is seeing multiple physical supply squeezes. If I go back to the Red Sea, a cargo coming to Asia would take possibly as much as a month longer, right? If it has to redirect, instead of going by the Bab el-Mandeb route down by the south, go up north around Suez, go around the Cape of Good Hope to get to Asia. That's a really long time to wait for oil at a time when the world is starving for barrels.
Yeah. So how much oil do governments have around the world right now in the form of strategic reserves, for example?
I think in this case, we came into the last squeeze in the crisis with relatively comfortable supply, right? There were all these workaround. US SPR was being released. People were releasing their SPRs around the world. And so there was this sense that there was a chance for supply and demand to balance. And so when some of that demand destruction was happening, people stopped. There comes the point when, in a way, prices don't go that high, right? But right now, I think what we're seeing is that a lot of those solvers have already been deployed. And last that has been reported, there are no plans for the US to deploy more SPR. So in terms of emergency barrels that can solve the crisis this time round, they aren't really there. So I think what's important to remember, of course, is that ultimately crude is the lifeblood of the global economy. If those flows stop coming, if the heartbeat of the Middle East stops, then I think very soon that fuel crisis is going to be felt across the globe, and that's definitely going to hit things like inflation.
Nicholas Watt there, who's the Bloomberg oil reporter with the latest, as we see no let-up between the US and Iran in these hostilities. In the meantime, of course, we had that key SpaceX launch delayed again in the post-IPO spotlight. We're watching this closer than ever. At the moment, we have a Bloomberg scoop. SpaceX is now turning away commercial Falcon customers beyond the time frame of 2028. So it really underscores how big a bet it has on Starship. They started turning away satellite operators seeking dedicated rides to orbit aboard its Falcon Falcon 9 rocket beyond 2028, according to people familiar. They're not taking these future reservations. Multiple satellite operators hitch a ride to orbit on a single rocket. They've also reportedly stopped building out some non-reusable components for the Falcon family. We have heard previously publicly stated by SpaceX that it intends to off-ramp its Falcon 9 rocket for Starship, but thus far, until now, we haven't had that timeline. So when it does stop, this is going to be incredibly strategically important and a major undertaking, because it needs to then really push through these setbacks that it's seen with Starship, cement the tech leaps as well to bring that to market in the span of a year and a half. This coming, of course, at a time when we've seen yet another delay to the next major test of its Starship rocket to Friday now due to unfavourable weather. It'll be carrying these upgraded Starlink satellites intended to burn up later in the atmosphere, but that has been delayed. But all of this is also central to, of course, Elon Musk's ambitions to put AI data centres in space. So much scrutiny, particularly given the stock price volatility post that massive IPO. More ahead here on the Asia Trade. This is Bloomberg.
The U.S. is imposing new tariffs on most major trading partners, marking its biggest move yet to rebuild President Trump's tariff wall after a setback from the Supreme Court. Bloomberg editor John Herskovitz joins us with more on this, and really coming into place when the previous tariffs are expiring on Friday, right? So how all-encompassing are these?
Yeah, I mean, the number of economies, it's 60 economies. It's almost all of the imports that the U.S. gets. It's nearly 100%. So it's a lot that's on the table, but there are also huge carve-outs for sectors like automobiles, energy, pharmaceuticals, things covered by existing trade agreements. So a lot of countries, the biggest economies in the world, almost all goods with these huge carve-outs as well.
We know that President Trump has many legal tools to pursue tariffs from countries. What is he using now as a justification?
Yeah, he's using Section 301 of U.S. trade law, which goes after so-called forced labor. The previous tariffs were under an International Economic Emergency Act, which was struck down by the Supreme Court. The Section 301 has been challenged in court before. It's been applied. So the administration thinks that it has a stronger legal standing this time than it did previously. So it's not that the U.S. is accusing these countries of using forced labor. The U.S. says that the laws on the books in these countries, the regulation, the monitoring, isn't up to snuff. And because of that, goods made with forced labor are getting into the supply chain and making their way to the U.S.
Other countries won't be happy with the tariffs.
Not at all. I mean, we've seen some denial of this, but we haven't seen any retaliation yet. It comes at the start of the trading day in Asia. So we're in Japan now. Japan's government is almost certain to comment on this, as well as all of the other major economies in the region. So we'll see some pushback coming as the hours go on in the day, because the day is just starting here in Asia.
Yeah, we'll be watching the markets. Although it's been interesting lately, we haven't seen such a big reaction when it comes to new tariffs, given, of course, everything else that's happening in the world, including the war in Iran. Of course, John Herskovitz here in the Tokyo studio, Bloomberg East Asia government editor with the latest on U.S. tariffs. We have more ahead on the Asia Trade. This is Bloomberg.
Well, Shery, we are seeing this escalation when it comes to geopolitical risk, right? A 13th night of US strikes against Iran, and no signs that we're going to see an off-ramp. Neither side, particularly not from President Trump, seems to be particularly willing or even interested at this point to hasten these peace talks that have really completely fallen apart that we know of. But at the moment, we are seeing the impact when it comes to crude markets, right? Energy prices, that broader inflation outlook really rearing its ugly head. Brent crude at last trade higher by just about 7%. 2% above that $100 level. All of this is feeding through to Fed expectations in terms of what it means for global inflation, what it means for central bank policy as well. At the same time, we're also watching the sort of malaise we're expecting for some parts of the Asian markets today. Chip makers, yes, will get that boost likely when it comes to the pretty optimistic numbers and outlook from Intel, but broadly we are seeing that down day. The Nikkei 225 down by just about 1.2%. For Japan, though, the yen not doing a whole lot other than kind of sticking pretty stubbornly around that almost 164 handle. But the question is whether it's going to start negatively impacting stocks if it starts sort of eating into appetite for foreign inflows.
And it's already doing a lot when it comes to the inflation numbers, right? Especially when it comes to import bills getting inflated. Now we have breaking news out of Japan. When it comes to the core CPI numbers, we're seeing an acceleration of June prices year on year, 1.6% growth. This is an acceleration from 1.4% in the previous month. Interestingly, take out energy as well, and you have core inflation is on growth of 1.7%, which is a deceleration from the previous month. So it gives you an idea that we are seeing the higher oil prices lifting that electricity bill, energy bill in Japan, and perhaps leading to more of that national CPI headline coming in at 1.7%. Very consequential for what the Bank of Japan does next. Let's bring in our economy and government reporter Yoshiaki Nohara. Yoshi, the BOJ deciding next week, will the inflation numbers, which seem a little bit more tame than before when we're surpassing that 2% level for a couple of years, will they do a lot to really weigh on the BOJ when at the same time you also have the yen to consider?
You know, it's surprisingly a strong number for core CPI this morning. And I would say that that would probably reaffirm market expectations that the BOJ is on track to keep raising interest rates, maybe even at a higher pace, faster pace than most people had expected a couple of months ago. But I would say that next week, they're probably not going to take the actual action because it just, last time, they hiked was just, recently. So it's too early to move.
A lot to do with a weaker Japanese yen, 164 per dollar. I mean, what's happening to the Japanese economy and where is the government when it comes to all of these verbal interventions, but not necessarily any action?
Shery, it's a staggering level if you look at it. And for most people, since it's the lowest level in 40 years or something, it's an unprecedented level for many households. And maybe households are expressing the negative concerns about weak yen. And of course, we know that when the people complain about the inflation, especially import-driven inflation, on the back of weak yen, that's something that the government has to keep in mind as they form policies going forward. But when it comes to actual intervention, we're hearing a lot of stronger verbal intervention so far, but they're kind of losing effect, as you can tell from the market moves. So I think that, the next motion that would move the market is actually they're stepping in, probably without much notice.
Not even Bloomberg's report that the BOJ is considering faster rate hikes has necessarily given that bump to the Japanese yen that we could have potentially seen in the past. What does this mean then for the trajectory of the yen and how important the BOJ considers FX volatility in its next decision?
Right. So that's a really good point to consider. But at the same time, you have to keep in mind that this dollar's, the yen is coming under pressure, partly because of the positive pressure for the dollar, because there's expectations that the Fed may raise interest rates. And also it's tied to the oil markets and Middle East. So it's definitely beyond what Japanese officials can control by themselves. So they have to be reactionary to what they do about this. But like I said before, it's really bad for the administration if they don't do anything on this, because the regular households are definitely feeling the pain and expressing their concerns about this.
Economy and government reporter Yoshiaki Nohara there. We'll get a little bit more on the yen, but of course that broader inflation picture globally is coming into focus now with the Iran war escalation putting price pressures back at centre stage, the ultimate macro risk for traders now. That's set to trigger earnings disappointments, wider credit spreads, more volatility in stock and bond markets. Let's get more from Garfield Reynolds, who leads our Markets Lab Asia coverage. Investors have been very good at setting aside the war risk as something that's just almost background noise, right? It's not going away. Does that 100 plus marker for oil change things?
That does look to be a wake-up call. That really has, in particular, sparked rates traders to definitively shift their views on how soon and how far global policymakers will raise rates. So up until a week ago, the RBA was seen as definitively on hold at next month's meeting. Now it's seen as about a 40% chance, so it's a live meeting all of a sudden. Similar sorts of things going on for the Fed's meeting next week, and we have a rate hike now fully priced for the following meeting in September. And if you look across developed markets, you've got very close to 2 rate hikes priced in the coming 6 months on average across every developed market. So that's the sort of pace of tightening that was both expected and I think pretty much delivered back in March, April, when the war really got going. We saw Brent go above 120 at some stage. We've got the sort of pricing for rate hikes now that we had when Brent was $20 a barrel higher. So that tells you that those markets have fully woken up to the war risks, and then that is cascading across everything else. You mentioned bond yields are on the rise, credit spreads are finally lifting off lows that people had been saying looked unsustainable. So, and that's a big risk, and especially now that we have a world where megatechs are borrowing lots of money and not carrying out buybacks because in order to keep up, they need to take on that debt. And that's going to make a lot of people nervous because a lot of the big crashes have precisely happened when debt markets rolled over.
Let's talk about that a bit more, because at the moment, again, markets have been very good at bifurcating what's going on in the real world and the enormous amount of money that's been justified going into AI. Intel's just provided another catalyst to rotate back in, right?
Yes, and today's session is going to be very fascinating to see what South Korea in particular does, but also Taiwan, Japan, to a lesser extent China, where you're going to have this balance between, on the one hand, the broader tech universe took a major step back. On the other hand, Intel had great earnings. The message for Samsung, Hynix, TSMC, other so-called picks and shovels providers, that's a good message that, for now anyway, that the hyperscalers and others are going to go on spending lots of money, building lots of data centers, therefore buying lots and lots of chips from Hynix, Samsung, Micron, the others. So that's a good story for them in the short term. And in the short term, their valuations there are going to look very compelling because the prices have come down, but the earnings expectations are continuing to creep higher. The difficulty is that what's going on in the Middle East threatens to unhinge the longer term view.
In terms of, speaking of unhinged, the yen, inflation picking up for the first time in 3 months for Japan. Is it green light? I mean, we're hearing so many proponents, including from within Bloomberg, I have to say, that Ueda needs to do something crazy, 50 basis points, more, something really dramatic to be able to re-anchor these expectations.
Yeah, they do need to do something. By now, it's pretty clear. I think their very hesitation over the past week or so about doing anything more than just jawboning underscores that they need to do more than even just intervention. Intervention, famous last words, they might decide to intervene before I finish speaking. But it does look as though any intervention is only going to have a limited impact. So the question is, can the BOJ act? It needs to act, you would argue. There's a growing thought that BOJ might surprise with a 25 basis point hike next week when it's expected to hold off, or even a 50 basis point. I think 50 basis points is unlikely because of the memories of what happened in 2024 when the BOJ surprised with a hike around the same time as intervention occurred, and we had that massive crash in stocks. But 25 basis points next week and promises to do more sooner rather than later, that might be enough to at least restrain the yen's inevitable slide rather than accelerate it.
Garfield Reynolds, who leads our Bloomberg Live Asia coverage. Let's see if there's intervention after maybe listening to Garfield's very persuasive argument in doing more. In the meantime, though, we do have some reporting from the New York Times that Iran has rejected the US ceasefire deal presented by the Iraqi leader. The details not immediately clear. Iranian officials saying that it was the only offer on the table. So that deal from President Trump was carried to Tehran by the Iraqi Prime Minister, according to officials on both sides, but it has since been rejected. This as we see a 13th night of strikes from the US on Iran. More on the Asia trade. This is Bloomberg.
The U.S. Treasury Department has accused China of a lack of transparency around its currency management, but it left its foreign exchange monitoring list unchanged and stopped short of labeling any major trading partner as a currency manipulator. For more, let's bring in our Chief North Asia correspondent, Stephen Engel, in Hong Kong. Steve, anything that stands out to you in this version of the semi-annual report?
Well, we all know that the Trump administration, as evidenced by today's news flow about the new tariffs announced by the Trump administration, that Donald Trump likes to use tariffs to sort of address the trade imbalances that he perceives around the world and not necessarily use or attack another nation's currency policies through policy. But again, there have been more amplified calls on Capitol Hill from senators like Elizabeth Warren, Rick Scott. They've called on the Treasury to actually start a formal investigation into possible causes of manipulation of currency by China. Friedrich Merz also has raised concerns in Germany. I'll get to that in just a little bit. But right now, in this report, Treasury did find a relative lack of transparency. Now, Treasury did, I might add, on this manipulation issue. You're absolutely right, Shery. None of the main trading partners of the United States this time around were labeled currency manipulators, but the Treasury did warn that China could get that designation, and I'll read the quote. If available evidence suggests that Beijing is intervening through formal or informal channels to resist RMB appreciation in the future. So right now, there's this monitoring list of 10 nations and their currency policies. 7 of them are Asia-Pacific economies: China, Japan, South Korea, Taiwan, Singapore, Thailand, Vietnam, as well as Germany, Ireland, and Switzerland. And again, there were no changes to that monitoring list. There were no additional or countries named currency manipulators. So in some ways, it's a non-story. But the other side of the story is that there is growing sentiment that something has to be done to address the fact that China might be limiting gains in the renminbi to help spur its exports. We all know that China has been leaning on exports and its competitiveness, price competitiveness overseas at a time of domestic economic sluggishness.
What about other trading partners with China? Are we seeing any kind of cohesion when it comes to an attitude towards the yuan policies and practices?
Yeah, well, I think right now, obviously, the world is flummoxed by trade tensions, no doubt. And if a big exporting nation like Germany, for one, sees some weakness, and I mentioned Friedrich Merz, he more recently has called out, highlighting called for efforts to address the cheap yuan. And that really marks a significant shift in the German leadership. We also had the IMF and other bodies indicate that there is indications that the yuan is potentially undervalued. But again, I might also want to focus, your conversation just now on the Japanese yen. U.S. Treasury did kind of put the crosshairs on the Japanese yen. There's different factors obviously going on there with the yen up to nearly 164 to the U.S. dollar. But again, Treasury says years of declines, obviously, as we can see a 5-year chart here, the declines against the dollar, years of declines have resulted in substantial yen undervaluation. I guess you could say that's an understatement. Adding that excessive volatility to the yen is undesirable. So I don't think there's as much pressure right now on that weak yen as it is on the perceived weak yuan in China. But again, Treasury clearly keeping an eye on that weakening yen.
Our chief North Asia correspondent, Stephen Engel, there. And of course, we're also watching the Korean won, which at least for today is trading at the highest levels in about 10 weeks. We're getting now the latest from the South Korean government that they will continue their close communication with the U.S. Treasury when it comes to their currency. Do also watch for the Aussie dollar as well. We have kept an eye on the Aussie given the latest tariff threats from the United States. We are now hearing from Australia's trade minister saying that the U.S. tariffs should be removed, that the new U.S. tariffs are unjustified, inconsistent with the U.S.-Australia FTA. Remember, President Trump is now rebuilding his global tariff wall using a new legal path and will begin collecting import duties of at least 10% on imports from major trading partners such as Australia starting Friday. Haidi.
Well, Cambodian Prime Minister Hun Manet is promising to do more to tackle transnational online scam networks. He spoke exclusively with Bloomberg's April Hong, who joins us now from Phnom Penh. So clearly sizable risks for these emerging economies as well, right? What did you guys talk about?
Yeah, I spoke exclusively with the Cambodian Prime Minister in his first international TV interview. And you're right, this is coming at a time where the country's energy and tariff challenges are being compounded by the border conflict with Thailand, at a time where Cambodia is trying to show the world that it's serious about cracking down on scams. Both the U.S. and China have put it under immense pressure to act, with the U.S. sanctioning 2 Cambodian senators. This week, the FBI Director Kash Patel was in Cambodia. Now, the Cambodian Prime Minister pledged to ramp things up, but also warned that these criminal networks are evolving, and that requires greater international coordination. Take a listen.
These are the cooperation to tackle common issues, go well beyond geopolitics. This is for the interest of all countries. Criminal network can attack countries that they don't have alignment with political. Anything they can exploit, they exploit. They can attack both U.S. and China at the same time for the benefit of money from scam operation or drug operation. So I see all this cooperation doesn't have to be confined within or be a hostage to, an area of what we call geopolitics. Sometimes it's too overblown when we focus on the negativities. But overall, the positive relationship between even the main, China and the U.S. has existed for a long and multiple channel.
You talk about how these criminal groups are becoming more sophisticated. A UN report shows that now they're even acting like corporates, that they're using, for example, in the Southeast Asian region, some of these criminal groups, concessions within special economic zones to operate. And Cambodia has dozens of such zones. What is Cambodia doing to ensure that such zones are not being used to facilitate criminal activity?
Yes, we have learned from experience from other countries. We have, I give strict instruction to our security agencies, work with local government, working with agencies in charge of the SEZ to make sure that no SEZ has been used. If any SEZ is found to be covering for criminal scam, they will be liable just to the law, just as any others. So far, we don't have any evidence on those. We're very careful on this matter. So a lot of SEZ in Cambodia is a platform, and the area for attract of foreign direct investment in multiple sectors. So these are the areas that keep growing, and we continue to hope to attract more investment and expansion of the business both in the SEZ and outside the SEZ. We will be committed, and we are committed to continue to crack down on this. And we have seen the result. We will make Cambodia become an area that not easy or worth to stay for scam online. This is what our commitment, and we will continue to do so.
No, it's not just about the scam crackdown. Later today, I'll be speaking with the Deputy Prime Minister who's been leading tariff negotiations for the country. Cambodia has been hit with 10% forced labor 301 tariffs. That is on the lower end of the range, but the outcome of the excess capacity investigation of the 301 tariffs, that is still pending. So we'll ask how he has been engaging with the U.S. at the time when the U.S. president is seeking to maintain his tariff wall, also speaking to the energy minister at a time where Brent is topping $100 a barrel.
Bloomberg's Avril Hong there joining us live from Phnom Penh. We have more ahead on the Asia trade. This is Bloomberg. Take a look at how we're setting up for the market opens across Asia after a down day over on Wall Street. We saw one of the worst days in weeks when it came to the Nasdaq. Of course, we're following those big tech earnings. A little bit of downside pressure when it comes to the Asian session. Potentially losses of more than 1% for the Nikkei and for the Kospi as well. This coming at a time when the Kospi had already gained ground for 3 consecutive sessions. Assets actually rallying in Korea on that GDP beat expectations, putting an August BOK hike back in play. We've also been watching those CPI numbers, inflation here in Japan as the yen hits its weakest level since 1986. The core CPI accelerating 1.6% for the month of June year on year, potentially really giving that extra push to the Bank of Japan in its decision next week. The market opens in Sydney, Seoul, and Tokyo are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens after a down day on Wall Street. Haidi, of course, we had higher U.S. yields at $100 oil, not to mention that the AI trade remains fragile.
And it is that point where we see that reignition of the energy crisis, right? Potentially, what does this mean for global inflation? What does it mean for monetary policy? Does that also start bleeding through to the exuberance that we continue to see in the AI trade? Those Intel numbers providing just the latest catalyst to justify the enormous amount of spending in that space that we continue to see, Shery.
And all of that spending expected to help some of these companies across Asia, of course, part of that semiconductor supply chain, right? But when it comes to higher oil prices and the ongoing war between Iran and the U.S., we've already seen the results here in Japan as well. The June core CPI coming in at around growth of 1.6% year on year. This is accelerating from the previous month. This a lot to do with just higher oil prices, and it will factor in the BOJ's policy decision, which of course we have next week. Take a look at how markets in Japan are opening, because we continue to watch the Japanese yen very close to that 164 level against the US dollar. We're talking about weakness that we haven't seen since 1986, despite the fact that we continue to get all of this rhetoric from the government and from authorities about potentially having to tamp some of that volatility. You can see the Nikkei now losing more than 1%. The topic's also losing about 1%. We're watching the JGB space very closely as well, because we have seen that sell-off with yields rising higher. The 2-year yield actually at the highest level since the 1990s, given that the BOJ rate hike expectations have been brought forward, given some of the reports that we've seen in the last few days. But at the same time, the Japanese yen really not budging. Take a look at how South Korea is also opening. Of course, we're watching everything to do with tech, right? I mean, we had seen the big tech earnings. We just talked about some of the suppliers across Asia that could see a boost. The Kospi now losing more than 1.5%, while the Korean won is also seeing some weakness. We had seen a little bit of more of that volatility be reined in the South Korean market this week, at least with some of that support coming for these suppliers. But in today's session, we're seeing a little bit of pressure with SK Hynix down more than 2%. We have now learned that they're limiting conversions of their Seoul shares into U.S. traded ADR, so 2.5% of outstanding shares. So what that means is that we could see, Haidi, the premium from ADRs over Seoul shares still wide for a while.
It would be very interesting, Shery, to see how all of this plays into the fact that we are building these expectations for a more hawkish Fed. How does that impact debt levels? How does that impact the debt financing that we've seen with a lot of these foundries, with a lot of these hyperscalers as well, right? So take a look at the broader picture as being reflected in the Treasury market. This as we continue to see the building of expectations that inflation expectations are going to start getting carried away with oil beyond that $100 a mark level. We're seeing US Treasury yields rising to the year's highs now. The Fed bets really being sparked with what we're seeing in energy prices, the threat of escalation, the seemingly short-term lack of likeliness that we're going to come back to peace talks. And in fact, we just had an earlier report from the New York Times saying that Iraqi-delivered peace proposal has been rejected by Iran, and that the parties are really not much closer on key issues, including what happens with the Strait of Hormuz, at a time we're also seeing other fronts being opened regionally, including the Red Sea, with those Iranian-backed Houthi militants as well. Yield on the shorter end, 2 years climbing to 4.37%, the 10-year benchmark hitting that year-to-date peak around 4.7%. It's been sitting around there for a while. Brent crude at the moment, kind of a lazy start, but it did put on just about 7% in the previous session. Here in Australia, we've got a lag of about 0.5% here for markets coming online this Friday. Let's bring in now for some analysis Jim Liu, who's a co-founder and lead portfolio manager at TenCap. So it feels like the $100 a mark for oil is a bit of a wake-up call for investors. Does it start permeating through to this nice bifurcation where they've gone, we can still continue to enjoy the AI rally and not have to worry about the war?
Yeah, look, I think when you're hitting the $100 mark, then the investor does become a little bit concerned how long is that going to last? Because if it does come off quickly, then it's not a real issue. I think what it is that, investors now started to think that, okay, well, previously they were pricing in rate rise, perhaps the rate rise might come a little bit sooner as the inflationary or the oil filter through the economy. And that absolutely caps the valuation for some of the AI, thematic. I think that in terms of the AI investment, the entire thematic is intact. Only thing is the valuation part, for the extremely expensive part of that AI chain is going to be under a little bit more pressure. It is going to have to be led by the earnings itself.
How do you, at this point, with valuations, with the enormous amount of spend and expectations, but not a lot of visibility going into next year and future years in terms of growth and profit and revenue, how do you determine what's good value at this point? Yeah, absolutely. So I think for the for the hyperscalers and for many other, that's at the pointy end of the supply chain, the pointy end of the AI investment. We find it's much harder to call what is the return you're going to get out of it, and how much more do you need to spend, and which language model is going to win. I think that's a very, very difficult component of it. And then you have the valuation cap because the rate is going higher. I think what we love to gain exposure to is though, because the hyperscaler they committed so much money into those data centers, and then there's the company that's supplying those businesses. What we're seeing is that so part the picks and shovels. Picks and shovels, absolutely, because their pipelines is ever growing, and we know for the next decade the work is just not enough, or is there too much work? We just seen the incredible amount of earnings growth coming out of those businesses, and they are not on very expensive multiples. So for us, this is where the next next generation or next return angle will come from. Then the really pointy end AI business. We were just talking about your recent time in Shanghai, which sounded lovely. How did it feel on the ground? Because it feels like the economy has kind of at least stabilized, perhaps. There's a lot of excitement that AI gap with the US is being closed now. Absolutely. So it was quite interesting. I was just in Shanghai, and then there was the AI conference, global AI conference that was taking place. Certainly on the ground, it feels like there's a lot of excitement and the government support, into that whole AI space. And I think the model differential is getting
closer and closer to the U.S. Leadership. And I think that this is absolutely defocused by the government there in China. I do think that as a global investor, that is, Chinese sort of AI supply chain is a very, very interesting diversification for the rest of the world. And that is going to be, I think, lead the price lower for some of the utilization ultimately of those language models.
And that's interesting, right? Because for a long time we'd get bad data print, no reaction in terms of stimulus. Now it feels like the national team is back as well. Clearly the AI space are national champions. Is that a one-way bet for these stocks then?
Yeah, so I think, for these stocks, that's where you want to be focused, where you want to put some of your bets in. And then the next is that the consumer front, clearly that's going to be a more sustainable part of the area. We feel there is green shoot. We feel the consumers becoming a lot more optimistic. And however, the real data is still yet to come through. We need the real growth, the real income growth to come through. And perhaps that's in the next few quarters. So our view of the Chinese economy is actually reasonably positive. And the more disruption and uncertainty there is in the world, it actually benefits China as an exporter as well.
I wanted to ask about Macquarie in particular. It's been an interesting week. What's your views in terms of where it goes next?
Yeah, look, I think the word to use is that it's got all cylinders firing. It's doing very, very well in almost every component of its business. I think looking forward, with the CEO change, that's the first question, I guess. And, look, I think it's a surprise that Greg would step in, but he's a safe pair of hands that's been described. In the time where Macquarie, the core business is doing really well, and then over the last few years, there has been a little bit of ASIC and all that investigation and remediation and the like. I think Greg is a good CEO for the time being, and the core business itself is just very well positioned for what is to come, and the volatility in the global energy markets and the like. So certainly the earnings looking very, very strong for the next 12 months.
What else do you like in Australia?
Yeah, so in Australia we like the obviously the commodity side, the copper side. We do think that it becomes a very important, critical part into that whole AI supply chain, or the picks and shovel. And then we like the data center, but we do prefer the data centers that already have existing, properties and existing agreement, because I think energy security is very, very important. So we think that's doing very well. And then from there on, we like, the whole long list of picks and shovels. In Australia, surprisingly, we have many of them that's coming through as a smaller businesses.
Junbei, always great to chat with you. Junbei Liu, who's the lead portfolio manager at 10Cap Shery.
And Heidi, take a look at some of those tech movers across Asia today. We're following some of those semiconductor makers, the suppliers to big tech across the U.S. as well. We had a down day for the U.S. The S&P 500 seeing its biggest drop in about a month. We had Alphabet falling despite strong results, Tesla plunging, profit declining despite their strong electric vehicle deliveries. And we're following Intel suppliers as well, because Intel jumped after hours after delivering a blowout outlook. Let's get more on those Intel earnings. Bloomberg tech anchor Ed Ludlow breaks down the numbers for us.
Intel is a CPU and a data center story. The CPU market is really taking off. That was the sort of overriding message from CEO Lip-Bu Tan when I spoke to him. And the situation is that demand growth is outpacing what is improving supply. If you remember, Intel left money on the table because they just could not meet customer orders, particularly on CPU, which is everything for them right now. So their own production and processes of their own products is improving, but they still cannot meet 100% of orders. But you look at the guide for the current quarter and the sort of 59% growth in data center, largely CPU gone, they are going in the right direction. Then it became a CapEx story. So CapEx will be more than $20 billion this year. That's a surprise, right? That's a change of plan, and CapEx will be higher next year too. And what gave Intel confidence, because Lip-Bu Tan is cautious, is the visibility they have on demand. They have a number of LTAs with customers. They look at the product side. They look at the foundry side. They would not invest into this. They don't deploy CapEx if they aren't sure of a return. There was this kind of very big reaction when the numbers hit and the commentary on CapEx. Things kind of pulled back a little bit. But for now, Intel is saying it's making progress. It's not fixed everything. Margins still aren't what they used to be. Foundry, there's a lot of questions, but they're headed in the right direction. This is Ed Ludlow for Bloomberg News in San Francisco.
Another earnings report due in the Asia session is battery maker CATL. This report comes after the company's valuation slumped to a one-year low, potentially making it easier to impress investors. Bloomberg Intelligence says the top line will stay strong, but margins will be closely watched as they reflect higher raw material costs and lower tax rebates. We have more ahead on the Asia trade. This is Bloomberg.
Our responsibility is to make the UN relevant again, to deliver, to touch the hearts and souls of people on the ground, to serve people on the ground, and not to confuse activity with impact.
Well, I believe moral authority is always needed, and you always need to speak out on the issues where violation of human rights have been, or where the violation of international law and humanitarian law is there. But of course, you have to insist on finding ways to put people together.
And what we need to do is to restore this credibility of the UN as a valid interlocutor, and then use the tools at hand.
I would like to see a UN that is back at the table in the scenarios of conflict. I would like to see a UN that has rebuilt trust, but has used that trust to deliver results on the ground.
The UN must be more present, especially in the peace and security arena, that we would have moved from where we are today to a UN that is delivering better in peace and security, both on the prevention side and ending of conflict side.
Because in reality, global security, peace and stability is something that is incumbent on the Security Council, and the lack of trust between the members today, particularly between the permanent members, is that means that crises go on without solutions being found.
The candidates vying to succeed Antonio Guterres as the US Secretary General laying out their visions for leading the global body at a time when conflicts in Iran, Gaza and Ukraine, as well as divisions among global powers, have deepened concerns about its effectiveness and relevance. And of course, the upshot when it comes to broader energy markets is we now do have oil prices beyond that $100 a barrel level. It is a bit of a wake-up call for investors that have been so far pretty happy to kind of shrug off or at least put aside geopolitical risk in their calculus. But take a look at this. The chart on the right of your screen, you can't ignore that. Brent crude soaring 40% in July, set for one of the biggest monthly gains on record. This as we continue to see really no signs of de-escalation, it seems, particularly when it comes to a peace proposal or a ceasefire proposal reportedly hand-carried by the Iraqi Prime Minister being rejected by Iran, according to reporting in the New York Times. In the meantime, US forces say they've launched further strikes on Iran, as President Trump says he'll hold Tehran responsible for any attacks by Houthi militants on Red Sea shipping. This is now a 13th night consecutively of strikes from the US on Iran. Let's bring up Bloomberg editor Michael Haidi. So, certainly no signs that either side are willing to move towards a compromise at this point. But for energy markets, this is seeming like a wake-up call.
Yeah, I think so, Haidi. And as you mentioned, the idea of a truce that was taken by the Iraqi Prime Minister, according to the New York Times, to Iran and was rejected, it sort of just underlines that we're stuck in this period of escalation. And we've had Axios reporting that President Trump is considering a huge strike on Iran, sort of really ratcheting up the pressure. The Houthis, of course, who've say that they struck a couple of Saudi ships in the Red Sea. So, if you want to talk about the definition of kicking a hornet's nest, this is sort of exactly what it looks like right now. So it really is concerning. And even if you go beyond the Middle East, in the Black Sea, in terms of getting oil out of Kazakhstan or Russia, that's getting hard. So it's really, there's a few choke points around the place now.
It's interesting because we're just over 100 days out from the midterms. We know that this war is both unpopular and expensive for President Trump. He's standing firm, though, at a time when we know the Iranian side historically are very good at waiting out wars of attrition.
Yeah, I mean, look, I don't think he has he doesn't have a lot of choice, because even that memorandum of understanding, it gave Iran an enormous amount of, of funds, or pledged at least an enormous amount of funds and reconstruction money and that sort of thing, and wasn't, according to various reports, terribly popular with its neighbours, who were like, well, Iran's bombing us and then we're supposed to stump up for its reconstruction. So he really doesn't have a lot of options but to stand firm. But this notion of keeping on bombing, history has shown since World War II, states very, very rarely buckle to that. In fact, it tends to unite populations. So he doesn't have a lot of options. His other thing is that, in a sense, he's a lame duck president. He's not going to be running again. So while it might hurt the Congress in terms of the elections, for him personally, this is a sort of a legacy issue in a way. He's talked about this for a long time, and I think he just sees a bigger picture here.
The bigger picture for President Trump, he's trying to do something here with Saudi Arabia and Israel, right? This civil nuclear agreement, which has ruffled a few concerned feathers. But he's also now thrown out the demand that this depends on normalisation of ties between Saudi Arabia and Israel.
Yeah, which throws a bit of a spanner in the works, because this is just, this is basically what President Biden had said he wanted, that the deal would go ahead provided that Saudi Arabia normalises with Israel, or joins the Abraham Accords, where some of the Gulf states have normalised relations with Israel. But Saudi Arabia has made it clear that that is dependent on Israel recognising a Palestinian state, and the current administration in Israel, there's no chance that's going to happen, particularly after October 7, 2023. That's just a long way off the agenda. So it's difficult to see how this proceeds, and the Israelis are quite concerned about the prospect of potential enrichment in Saudi Arabia, which President Trump also said is not going to happen. So a lot of uncertainty there, but it would be a significant deal if it comes to pass, and probably for American firms if this does go ahead in some form. Perhaps they'd fudge a way to get through that. But it sort of raises questions over it.
Bloomberg editor Michael Heath there with the latest. And two Chinese-owned tankers carrying Saudi crude have successfully exited the Red Sea via the Bab el-Mandeb choke point, despite Houthi attacks on vessels in the region. These vessels are the first to cross unimpeded since militants warned ships against calling at the kingdom's ports. Meanwhile, some Asian crude oil buyers said to be in talks with Saudi Aramco to potentially reroute flows around Africa in a bid to avoid that Red Sea region. Shery.
And Haidi, when it comes to trade, we're also watching the U.S. imposing new tariffs on most major trading partners, marking its biggest move yet to rebuild President Trump's tariff wall after much of it was overruled by the Supreme Court. Bloomberg Economics lead for economic statecraft Chris Kennedy joins us now with more from Washington. Chris, we now know that the president has various legal pathways in order to keep applying his tariff pressure. What do we know about these newest ones, and how consequential will they be?
Thanks for having me on. So these newest tariffs, we expected these to be imposed. The temporary bridge that President Trump had used, this Section 122, after the Supreme Court ruling that you referenced in February, was set to expire tomorrow. And so now we see the first stage of these replacement tariffs under Section 301. There was a proposal out in early June, from the U.S. Trade Representative laying out planned rates on various economies, 60 in total. What we're seeing today is that the proposed rates are actually coming in slightly lower than what was proposed. We had expected the U.S. effective tariff rate to rise to about 11% or 11.1%. We're seeing that only go up to about 10.7% based on some numbers that we just ran a few moments ago. And that's primarily due to some additional alleviation for including Asian economies, Taiwan, Japan, Korea, which all were given some credit for some of the trade deals that they've signed with the U.S.
When we look at the evolution of President Trump's tariffs, is there anything that sticks out to you, especially given perhaps some of the timelines, the new timelines that we're seeing for some of these tariffs, and what he's hoping to achieve in the next few months?
Sure. So the biggest takeaway is that the Trump administration is not letting that court ruling stop its trade agenda. We saw a pivot after that Supreme Court ruling in February. The USTR, the U.S. Trade Representative Jamieson Greer, initiated several investigations under Section 301, which is a far more durable authority. It's been tested in court. And so we've seen that shift, moving toward more tested authorities that are not going to be as subject to litigation or at risk of litigation. But we're also seeing other moves. So earlier this week, the president announced that he was imposing new tariffs on Canada that are set to take effect later in August under another provision, much like IEEPA. It's called Section 338. It's from 1930. It's never been used before. That is a far more flexible authority. The laws back then were not written with as much process. And we know the president likes that sort of unilateral, the ability to impose and remove tariffs very quickly. And Section 338 gives that. So we're seeing sort of a dual track to rebuild the base tariff wall that existed before the court ruling, relying on these more durable authorities, but then also pivoting to new untested authorities to make some of these immediate threats that the president is so inclined to do.
Bloomberg Economics lead for economic statecraft Chris Kennedy. As we continue to follow the latest on President Trump's tariffs, we're also getting the reaction from the New Zealand trade minister saying that U.S. tariffs are disappointing and they reject those findings around forced labor. You can see it's a down day for markets across Asia today as we're also digesting the renewed conflict between Iran and the U.S. and the $100 price to oil. This is Bloomberg. It's a down day for Japanese equities today. We're seeing those losses being led by communication services and technology stocks. Energy, though, gaining ground today. Not surprising, given that we have Brent still trading above that $100 a barrel level. We had already June core CPI here in Japan accelerating from the previous month, coming in at 1.6% year-on-year growth. BOJ hike expectations have been moved forward, but the Japanese yen continues to be under pressure, Haidi. But the yield space right now, we're seeing those yields soaring to multi-year highs.
Yeah, we'll continue to watch really the volume grow when it comes to expectations for the BOJ to finally do something and do something quite dramatic. But take a look at what we're watching when it comes to China assets. And of course, we still have that element of the national team action that we saw previously at play. They're really pushing expectations that we'll see further gains for that AI and tech space in China. The yuan is in focus, of course, after really a period of sustained appreciation. Barclays saying that the appreciation at the moment is just sort of on track for further gains this year, although we could see a slower pace of that. We also have the US Treasury calling out China for a lack of transparency there. This is Bloomberg.